Hi, this is Mike Swanson. I'm visiting David Skarica in the Bahamas, and the real reason I came down here was to actually talk with David about the topics we're going to talk about in this video, and that's opportunities in the gold market that aren't really available to the typical person who just has a simple brokerage account and is looking at financial websites. There's a step beyond the gold market that we're excited to be a part of, and you might be too.
Okay, so what Mike is talking about is, not so much in the last cycle, I did a few of these, but really in the first cycle in gold from about 2001 to 2007, 2008, I made a lot of money doing private placements and IPOs and this sort of thing. So, and what that is that where the real leverage is in the gold market, and where really most of the big players make money, is they set up their own deals, they finance their own deals, and then when you do a financing, you get something called a warrant. And that is basically the right to buy the stock at a specific price within a specific date. So the way it would work is this. I'll give you an example of a deal we're doing right now. The stock is trading at 6 cents, so we're buying a private placement or financing at 6 cents, okay? And the warrant is at 7. And you can buy the warrant over the course of the next 5 years. So that means as long as this stock is over 7 cents.
And a warrant's like a very long-term option.
Yeah, it's kind of like an option. But this is a little, this is a good deal. Like most of these warrants tend to only be good for, a 1 or 2 or 3 year period. But this happens to be a 5-year one. But this means that as long as this stock stays over 7 cents, you can buy the share at 7 cents. So it means like this. Say you buy 100,000 shares or $6,000 worth of 6. If this stock goes to 30, you can buy another 100,000 at 7 cents, and the stock is at 30. Or if it goes to 20, the stock is at 20. And the real reason it leverages you is that you can take some profits in the stock as it goes up, and rotate that money back into the warrant, and you've got more stock, and it leverages your gains. Because example would be this. Let's say, for argument's sake, again, you had this 100,000 shares, and the stock went to 30 cents, okay? That would be $30,000 off a $6,000 investment. Well, let's say you sell $7,000 worth of the shares, and you which would be at 30 cents, would only be roughly, 25,000 shares is all you would have to sell to raise the 7,000. So and then you could just rotate that money back into the warrant, and then boom, you've got another 100,000. So the long story short is, instead of the stock going up 5-fold and you're making 5 times your money, with the warrant where it is, you actually end up making 8 or 9 times your money, right? So that is kind of the leverage you get. You get the option to buy this share at a specific price, as long as it's above that price within a specific period of time. And because of the way the Canadian markets work, and they're very highly efficient in terms of these financings, because so much of the junior industry is dependent on them, the hold is only 4 months. So it's not like you have to hold the stock after you do the private placement. So, like, basically our idea is we're gonna do a few of these deals every single year as the gold market and the bull market in gold matures, and then we can rotate into other deals. We can exercise the warrants and make very, very good money. And I know people that have used this strategy to make 10, 15 times their money in just a period of years. And then we also will have access to private placements, meaning that like a pre-IPO private company, and it's that's similar to like say in a NASDAQ listed company where you buy the company when it's private, and when it comes public, there's usually a markup of hundreds and hundreds of percent. Now, granted, on those kind of deals, you have to sometimes wait 6 months or even a year for the company to come public. But again, that's kind of like what these insiders do, right? They call it a seed financing, where you're getting the first financing on a stock. And yeah, these stories about people who say bought the seed financing and Google and Facebook and these huge tech companies. But people who've bought seed financings, a lot of these mining deals, have also done very, very well. And as far as I know, I'm not soliciting the offer. I'm just basically telling people, this is what I'm doing. Here is the private placement. Here's information on the company. And if you wish to do it yourself.
Yeah, I mean, personally, we both believe we're starting a new bull market for gold and mining stocks and silver. And we have done some of these financings in the past bull cycles. Haven't done any, and I haven't done any in years and years and years. But we're in a moment where you're early in a bull market, and that's when you want to, or I believe is the best time to invest. And there's different ways to invest in a gold bull market. And one of the things that I'm doing is I'm holding in my investment accounts core positions using exchange traded funds that invest in a bunch of stocks. And so, for example, Newmont and Barrick are in all the major gold stock exchange traded funds. And because I already own those funds, I essentially own positions in those stocks through them. So I feel no need to go and buy Newmont or buy Pan American Silver or something else, because I really essentially already have positions in them through ETFs. However, I do know that there are stocks not in ETFs that tend to go up tremendously in a gold bull cycle. In fact, they tend to be the ones that, on a percentage basis, go up the most. And these are junior mining companies or exploration companies that do really well, or the best of them. And you can buy these on the market. However, what we're doing, or looking to do with some of these, is do actual private financings. That means you are helping the company get capital by buying shares directly from them, and that's how you can get warrants and so forth like this. Now, you can't just go and look at some stock that's trading and think, well, I'm going to go do this, because they may not be doing a financing.
Well, here's another advantage is I'm not just going to do every single deal.
Yeah, that's right.
Because look, man, you got to know something. There's an old quote by Mark Twain that a gold mine is just a hole in the ground with a liar on top. And unfortunately, in the junior mining industry, you do have a lot of shady individuals, people looking to make fast money, all this sort of thing. So I'm actually looking only doing, say, 8 to 10 deals a year, okay, with this strategy. And because Mike knows me, when he met me about 15 years ago, I was traveling to all these trade shows, meeting all these people in the industry. So I actually have about 5 or 6 groups of people that I work with and I trust, and that, like the deal we're doing now, they have a good track record. The deal we're doing now is actually a guy who ran a company that was taken over by Curating, by a major company. The next deal we're going to do had a company that was taken in the past that was taken over by Kinross. So we're talking about high quality people here, and I don't even have to talk to the riffraff, because the high quality people I know, when the market turns higher, are going to start doing more deals, and just the deal flow from them will be more than enough to make very good money in a bull market. So that's my personal like way of kind of doing this. So again, this is very unique. No one else is kind of doing this. And Mike said he owns the ETFs. I own one small mutual fund, but that's gold and precious metal stuff. But really, I actually own some Coeur d'Alene and some Barrick. So my philosophy is, look, I own 3 or 4 of these major companies, or even the smaller producers. And the problem with them is they're essentially all going to do the same thing. Okay, maybe Barrick will go up 300%, another one will go up 400%. But and this is something we're going to say in a second. Another attribute to this. But they're essentially going to go up roughly the same, and they don't have the possibility or potential to go up 1,000 or 2,000%. Like these smaller junior companies can, and you're getting into the bottom floor. And another thing too is the problem with Barrick or Newmont is these companies need higher gold prices. If gold just sits at, say, 1,600, Barrick is just going to stick at roughly the same price. But the thing about these juniors is once gold gets to a certain level where these juniors can really find an economic deposit or expand a resource or expand a small producing mine, they could maybe go up 5, 6, 10-fold, even if gold doesn't go higher, once it gets to a nice enough level. So that's the other advantage you get this. And the perfect example is this. If you look at the gold bull market of 1993 to 1996, what you'll see is after the first jump in 93, The XAU, or the seniors, never really went that higher into 96, 97. But there were companies like Diamond Fields had a massive find up in Newfoundland. A company that was infamous for being a fraud, Briex, but Briex actually set up this frenzy in the whole industry, and a lot of these companies were going up again 100, 200, 400, 500%, when everything else, like the seniors, were just kind of sitting there. So that's the advantage you get. And of course, we're not saying to be overly aggressive, put your life savings into a junior penny stock, but if you have some money that you would wish to use this strategy with, we really think it's a unique thing to use with some speculative money.
Yeah, and as I said, I plan on using the ETFs as a core position, and then buying smaller stocks outside of that, as this more speculative or add-on or whatever, where I think they have real upside for a small amount of money. And there's a few trading that I'm looking to do that with, but this is really where the most bang for the buck can be made, is in doing deals. What we mean by deal is financing a company, a secondary offering or a pre-IPO financing and so forth. And we did a conference down here in 2009 on Paradise Island, and had a couple people there that this is what they do for a living. And one of them is the stock you're talking about. I think they talked about it then.
Yeah, he was there.
He was there, and it got bought out. So, and the thing is, there's hundreds and hundreds of these stocks that are trading on the market, and in the last 2 cycles, we invested in things that did absolutely incredible, but a few that did not, or never even came out trading because it was towards the end of the cycle, and the deals are worse. So we've learned who to talk to
and who not to.
Yeah.
And another thing too is with these junior mining cycles, because the bear market was so long in the 90s, and you were starting the secular bull market in gold, that first move up from 01 to 07, 08 was really kind of a longer move up than usual. I find these things tend to last between 3 and 5 years. Like the last one after the financial crisis lasted from 2008 to 2011, and you still would have been okay if you held through 2012. Okay, so 3-4 years. So our idea is that we are now 2 months into this rally.
Yeah.
We're going to really do a lot of these deals over the next 2 to 3 years, and then we're not going to worry if this turns into a bubble, because we're not bubbleheads. Because we have people who write us who are bubbleheads, and our philosophy is let's do the majority of the deals early on in this bull market when it's only 2-3 years old, and then we can do 1 or 2 deals in a year or 3 deals a year when it's more mature. But we don't know when it's going to turn into a bubble. 4 years, 5 years, 7 years. But after 3 years, you should be able to make plenty of this money in this strategy and not even have to worry about participating in the bubble at that time. So that's kind of our philosophy. And another thing too is, let's say it takes 7 years for this turn in the bubble. Well, doing all these deals for the next 3 years, you'll then be positioned. You might have to hold some of these things a little longer than you initially wanted to, but you'll be there positioned. Like, for example, my best one was I bought a seed financing, and actually of one company for a very small amount, and the stock ended up going to multi-dollars in just a very quick amount of time. And this is actually the same company that got taken over by Curating. And anyhow, that was in about 2005. So gold stocks bottom in 2000, but really then the cycle in the juniors didn't start until about 2002. So again, you're about 3 years in, and that's about the time frame we're looking at here in the next 3, 5, maybe even 7 years. So that's kind of the idea, and the advantage that you're getting is you're getting in with good people. I had to learn this the hard way. I had to get burnt in some of these deals. I had to get, we had one guy who ripped us off, and he had investigations from the SEC and all this crap, right? So, but we have learned. We weeded all those people out, okay? And now we get in the best deals with the best people, and you're gonna get access to that. And for a pretty minimal amount of money. And one thing too, because I do know that some Canadian people are watching this, because we both have Canadian listeners and readers. What's interesting is actually one of the CEOs recently told me that they've got something similar to the Jobs Act in the U.S. and Canada now, where even if you're not an accredited investor, you can buy under $15,000 of a private placement, which has never happened before. And by the way, we don't want people to get in huge amounts for the most part. What we want is you get in 10 grand this team, 5 grand this one, 15 grand, something. And these are Canadian dollar amounts, by the way. So that's all we want is people to get in. If you're in small amounts, if you do that with 5 or 6 deals and 2 of them take off, you're gonna make more money than you ever thought you could in a gold bull market.
Well, is this open to? Do you know, like, for an American investor, do they have to be accredited? Because I didn't even think. I know I am, so I didn't think about it.
Well, some of the IPOs have a friends and family clause.
Okay.
And because I would usually be associated with something, maybe you could do that clause. And then some of the IPOs you may have to be accredited. With an American investor, there may be a few things involved. For example, I help some Americans set up an account with my broker, and a broker I use in Canada, and he even says they have to do all this stuff with their risk profiles and this and that to make sure that they can buy one of these.
To be an accredited investor too means you have a net worth over $1 million, or you
make $200,000 a year.
Yeah. So
I know that's in Canada. I don't know.
It's the same.
Okay.
So if you fit into that category, it doesn't even make any difference anyway. But the thing is, if you want more information about this, if you want to be notified about these type of opportunities, the thing to do is sign up for your service.
Even though these are Canadian companies, and I told you they have something similar to the Jobs Act in Canada, I'll look into it, and because we just heard this like yesterday, that's why I haven't looked into it yet. But I would assume that a lot of Americans can qualify under the same thing too, where if you're not accredited, it's just you can buy it under the 15 grand or something. So I'll look into that, and you can always write me an email asking me. But I really think this is something that people should be open towards, and like I said, look at what really happens when you see these junior newsletter writers recommend a stock. They're usually in the stock through one of these deals. They're not buying stock in the market. They're usually bought the private placement, have the warrant, and they recommend the stock, right? So we're actually giving you access to this sort of thing. And to be blunt with you, with all due respect to them, most of these letter writers don't really do that.
No, I don't know of any that do, actually.
Yeah. So, and like I said, one thing that's great, because the whole junior mining industry needs this money to survive, so they essentially only have 4-month holds, which is great, because 4 months is not a long period of time to be locked up in something. And usually these are already listed, usually they are already listed companies, etc.
But the thing is, like, we can't offer this to just thousands of people or something.
Yeah, at some point we're going to have to cut this off. Yeah.
Well, we have to offer it only to the paying members. We can't offer it to 50,000 people. And
no. Like our free list, we can't blast this out to. There's no way.
Right.
And actually, what I'm even doing is I have like tiers of my service, and the people that subscribe through you get the top tier.
Okay.
I'm actually the first couple deals I'm going to offer to everyone, just to show people what I can do, or not offer, but show to everyone. And then what we're going to do after this is
everyone. You mean all your paying?
All my paying people. Yeah. But after the first couple, the people on the service that they get through you and my highest tier service, they get first dibs on it. Because let's say a company's only raising a certain amount of money, and all of us buy it up.
I think it's going to sell out really quick. So.
And look, man, we were watching some videos last night. We'll just end it off on this note.
Yeah.
On the internet bubble. And what was interesting, we were watching all these IPOs. Actually, if any of you want to watch them, type in Journeyman Pictures, who's kind of like the Vice of Australia, and type in the internet bubble burst. And they do it. But, when you're watching the documentary, you see the stock's up 800% in a day. I know we all know that was a bubble, but we all still want to make 10 or 21 in our money in a stock. And I've done it a few times. And really, this junior mining sector going forward, I think in the next 3-5 years is going to be about the only way to do that. Actually, a friend of mine named Stan Barty, who runs a bunch of these junior deals, has actually he sold a bunch of them to majors and this sort of thing. Desert Sun, he sold to Yamana, Consolidated Thompson, he sold to Cliffs Natural Resources. Stan always says that this is like the only industry where you can make 10 times on your money. And really, that's the truth, So that's another advantage of this whole thing that we're setting up here.
Well, I did that with one of his stocks, Desert Sun Mining. I bought probably around 2002 or 4, somewhere in there.
We bought about 50-60 cents, I remember.
Yeah, and it went up to
$5.
Yeah, it is crazy. So then it got bought out, by another company.
Here's the advantage, though. See, we didn't know Stan, and we were young at the time. We were starting up. Here's the advantage of the deals. He initially funded that with about a 20 or 25 cent financing with the warrant. So imagine Mike and I had bought this financing with the warrant instead of just buying the stock on the market at 50 cents because it was already trading, and we had just met him like way after that and didn't know about it before. But that, like, you're buying a 20-cent stock with a 25-cent warrant, or 25-cent stock with a 30-cent warrant, and it gets taken over for $6. That's like, and again, those cases are rare, but the advantage that we have is that we know the good people that can do this,
Well, and I plan on, basically, I think the bull market for this stuff's going to last for several years, and my whole plan is to buy these for the next 2 years or so, maybe 3 years, and have a big portfolio, a nice portfolio of this kind of stuff, with the idea I'm going to sell most of it or all of it a couple years from now. So I'm thinking I'm doing this to invest, for a time frame window of a few years like that. Not
my cat
like
just jumped
looking to make quick money myself, even though sometimes the gains can be like that. It is.
Yeah. I think for the most part, you gotta assume that you're gonna hold something for a year or 2 years or something like that. And if you got the warrant there, and let's say you wanted to invest in something else and the stock wasn't moving yet, this is the great flexibility this brings. That after the 4 months, and say you own the stock for a year, and say it hasn't gone anywhere, and you want to do another deal, you can always just sell it slowly on the market, and then just rotate that money in another deal and still have the warrants there. So it's a great flexible way of investing in this industry. And see, I was very disciplined. I guess this will be it. And that this whole move down from 2013, really when 2013, when everything busted, 2012 to now, I really wasn't doing a lot of deals. Especially 2014, 2015, I did zero. I did not do a private placement, nothing, because I was like, I just got to see this plan out, and I got to see it bottom out and play out. And that is now what's happened. So now I think we're ready to go pretty early in the cycle.
No, and that's going to make things real exciting for the next couple of years.
And it's a different kind of way of trading, And by the way, just a note, because we get a lot of people who are interested in 3X ETFs and all this sort of thing. Look, man, you'd rather do this than waste your time. And I've done it, by the way, but don't trade the nugget. Don't trade the J-Nug. Don't trade your portfolio into dust, with dust, right? Do these. This is the much better way of doing it, with probably the same leverage and more leverage without the stupid erosion and all this sort of thing,
Well, I'll just make a quick comment too. In 2009, we did a conference in the Bahamas, and we're thinking not next month or anything, but sometime in the future, we may do one down here, and it could be just devoted to this very topic,
Yeah, we're going to talk about that in another video.
Okay, sounds good.
So.